Investors and traders, welcome to the channel Market Chart Pattern. Today is 2nd of July 2023. I hope everyone is having a fantastic weekend. This video is for educational purposes only and it is not a financial advice. We will be covering the key US stock indices in this video. And just before this video, I've also posted a video about the US Treasury bond futures for the 10-year notes, and also the long bond futures, which is the 30-year duration bond future. Please do watch that, because that is also going to give us a perspective about some of the directions the market might be expecting for the interest rates. That could obviously have an impact on the stock market. So what we are looking at is the daily chart of S&P 500 E-mini futures. We had a target which was met last week, in fact the week before, and what we have seen is a slight pullback coming right from the 78.6% Fibonacci retracement around the 44.78 level. The market pulled back for a few days and it came pretty close to touching the 20-day moving average. We also kind of estimated how long this correction could go, and for that what we did was this is in this move higher. This is one of the corrections that had taken place. So if you project it from here, this is the market symmetry concept. Wait, hold on, move it a little bit up below here, and then we also had this much taking place. This is the BC leg, and we projected from here. So we were just trying to estimate where could this pullback lead us up to. And then what we found is that in fact there was a very nice level coming up. If we just take this one here, so we were also looking at this 38.2% retracement coming around 43.50 level, but the market was stronger, in fact, and what it has done is it began to move higher, and now it's testing those highs again, which were formed on the 16th of June 2023. Now guys, this is a rally is to be expected, especially last Friday, because that is the Friday before a key holiday, and the market has a tendency of better than 50% rallying before a major holiday such as the 4th of July in the United States. So we have seen a really good rally take place last Friday, and now the market is actually going back and testing those highs again. And what will be interesting is to actually see the how the market is going to trade on the 5th of July. Although the market will be open in terms of futures trading some of the days on Mondays and Tuesday perhaps, but the real trading will resume on the 5th of July. Now let's actually go back to our weekly chart. Excuse me. And here what we see is that we also have a higher target, which we spoke about on the weekly chart, of around 45.30 level, and there's a possibility maybe the market might actually try to test these levels as well. One of the things that I would like to point out while we are here is this. Let me actually get the dates back here for this one. So this is the analog that we were following. And per this analog, we had some really nice kind of symmetry coming together for this market of 2022 to 2023, and also the market of 2002 to 2003. And if there was going to be a correction taking place, we estimated that it could be around roughly 5%, because that has what in fact took place 20 years ago. But this time things look a little bit different. So in fact the market actually rallied and is now testing the highs one more time, and we had done some rough calculations for the timing of it, and we came up with the 5th of July being an important date. Now don't hold me to it, time is a lot more elusive, and this is just the back of the envelope rough calculations, but it'll be still interesting to see what the market is going to do in terms of trading and price action on the 5th of July. So we'll just keep this as a reference model. The things with analogs are that they keep on working for some time, then they stop working, and then they get back in line again and keep working again. So we'll have to kind of follow these on a weekly basis to make sure that, you know, the two markets, the analog that we're looking at, is in fact moving together, or whether they are diverging, and sometimes they also reverse diverge as well. So let's go back to our stock indices, and I'm going to get back. Let's take a look at the NQs. So the NQs are also, you know, this 78.6% Fibonacci retracement has been a very key retracement, and the market pulled back from it, and now it's just going and retesting it. So we'll have to keep on watching it next week in terms of the price action, whether it's able to convincingly take it out, or whether it's just going to be a retest, maybe a slightly higher move higher, and then it finds a resistance, kind of a double top formation, and market begins to pull back. We'll have to wait and see. Let's take a look at the Russell 2000. Okay, so the Russell 2000 is actually pretty weak compared to the other two indices that we saw. However, it pulled back into this trading range right at the top of it, tested that, and now it has gone above our key level of 1852. It remains to be seen whether it's just going to be a double top formation here, or whether we are looking at a leg higher, which could be another ABCD formation challenging the highs coming in from the 2nd of February, and which could in fact see the market trade higher. So the Russell 2000, the small cap stocks, they are more sensitive to the interest rate movements. They are kind of, you know, range bound for a long time. Finally, we'll take a look at the Dow Jones, and this is what we were discussing in our previous video. We have this ABCD formation right here in this red, which could actually see the market test the highs coming in from the 13th of December 2022. Again, next week we have to really watch carefully whether it's just going to be a double top formation here, or in fact the market is going to be strong enough to take the highs or reach the highs of this trading range. So in fact, it's just been in a trading range. However, the market looks much stronger if we just try to zoom out. It's just been in a really long consolidation for quite a long time now, you know, whenever markets go in this kind of a consolidation for such a long time, when they break out in either direction, those breakouts usually last much longer. So we'll have to just wait and see which way this is going to break out. The chances are, the more and more chances are that perhaps it's going to break out to the upside. We'll have to wait and see when that happens. So this is what we are looking at in the key US stock indices. And if you like our analysis, how we look at the markets using pattern recognition, Fibonacci retracements, projections, and expansions, please do subscribe to the channel, and thank you very much for watching. Good luck and good trading, and have a great weekend.